Hello and welcome to Advisor Know-How. This week we'll be discussing client fee charging and the ongoing debate around the percentage of assets model versus flat fee charges. Last year, NMA published 2 articles written by Alan Smith of Capital Asset Management, which discuss why the firm switched to a flat fee model. The articles generated much interest among advisors, and Alan joins me today to bring the discussion up to date. Hi Alan.
Hi, good morning.
So firstly, I just wanted to address a couple of reports. The first being a retirement income report commissioned by the Labour Party. And it states that advisors need to be doing more to transform themselves into a recognised profession, and that percentage fees leaves them more akin to estate agents. So with that in mind, do you think other advisors need to be considering a switch?
I think it'd be fair to say that most businesses probably, in whether a financial advice business or any other type of business, should be having a review of their pricing structure, their models, their competitive position, their profitability, all those important things that any business should consider. And as I've mentioned in the past, we think that there are some challenges around the percentage of assets model. And really in terms of evolving towards a recognised profession akin to professions such as the medical profession, the legal profession, the accounting profession, I'm not aware that many or any of those actually operate in a sort of contingent percentage of assets model. And so I'm not sure what the estate agent industry thinks about the report, but I guess I'd rather be compared to a Harley Street surgeon than an estate agent, because and the pricing model is more of a professional fee-for-service model as opposed to charging somebody a percentage for what investments or savings they've got.
So the second report is the FCA's Business Plan for 2016 and 2017. And they said they want to see affordable, accessible advice options that meet consumers' needs, and that the cost of advice is clear and transparent. So do you think big changes need to be made in order to accommodate this?
In our view, there are a number of challenges around the ad valorem percentage of assets model, and they include issues that the regulator has raised before, such as contingent charging and an element of possibly conflict of interest. If I can only be compensated or remunerated in terms of the professional advice that I give, if that client invests or takes out a pension policy or something like that, then there's a chance that the advice could be somewhat conflicted. So yes, it's apparent that it's still very much on the regulator's radar, and I think certainly as a firm it's something that we continue to review ourselves.
Capital's flat fees are calculated considering what it costs to deliver a service in time, expertise, risk and value. How do you put a value on intangibles such as risk and expertise, especially if a client is new and you don't necessarily know their needs quite yet?
With our initial meetings with potential new clients or existing clients, we'll be able to identify pretty accurately what the extent of the issue, the challenge is around complexity. If there's certain aspects of the advice proposition that we need to deliver which are extremely complicated, that we need to use some of our internal expertise, some of our trust expert or one of our chartered tax planners or something like that, then there's an attendant cost that naturally would go with that. And we would work out a calculation taking all those issues into account and arrive at what we believe to be a fair and equitable fee proposition. We would then discuss that with the client, explain how we've arrived at that, and agree to go ahead or not. The case may be, if a client chooses that they don't wish to engage with us on that basis, then that's perfectly fine as well.
Despite Capital favouring flat fees, do you think there's ever instances where percentage of assets is more appropriate?
For us, as we continue to recognise that really in the relationships we had with clients, where they placed the value considerably was around financial planning and strategy and consulting as opposed to pure investment management. So with that in mind, we just felt it was a natural evolution to change our pricing model and explain it to clients and discuss it and tell them the reasons we've arrived at that. And so that's a journey that we've been on, and other firms may choose to go on in the future. I mean, for us at the moment, there's not many other firms, as far as I'm aware, operating in this model. So we see it as somewhat of a differentiator, and it has been proved to be quite attractive for one or two clients.
Thank you. Lots to think about there. Thanks for joining us.
Thank you.
For more information, go to citywire.co.uk/New Model Advisor, and please add your views on Twitter @New Model Advisor. Thanks for watching. See you next week.